Hey, this is Jim at 7:58 p.m. in San Francisco, California on August the 19th. I am not a financial advisor. I do not provide financial advice, but I wanted to show you guys something interesting here. So the company that provides the API that powers our Nimoy terminal has already executed the split adjustment for AMC Common. So you guys can see here that not only has the price been adjusted, but all of the Nimoy triggers have been adjusted. So again, the triggers look exactly like they looked in relation to price at the market close. And the only thing that changed is the price of the stock. So here's the price of the stock. It's you know basically moved down exactly the dollar amount that it was, the percentage it was supposed to move down, and that we were told it was going to move down. As far as the setup, it looks every bit as bullish as it looked prior to the event. We have a beautiful velocity characteristics, beautiful trigger orientation. Everything about a Nimoy is a sort of a buy the dip and a bullish setup. Again, for me personally, I'll show you guys the volume characteristics on the big dump today too versus a Nimoy. If you guys are subscribers, and I'm going to share this video with everyone, and I'm sure subscribers won't care because it's sort of, it's a community after all. But if you're a subscriber, you know that I've continued to show these setups on pullbacks, and this is just something that works over and over and over again. It's really simple. So what this is these are volume spikes. You're drawing a downtrend off of the volume spikes. You're drawing a horizontal line off what I call nesting volume. These are 60-minute volume bars. The nesting volume just represents sort of nesting or resting, meaning in between the sort of excited volume spikes to the upside. Where does the volume sort of settle at the volume bar highs in between the spikes? That's the yellow line. When the downtrend line of spiking emotional volume collides with the nesting resting volume, you expect to see a volume increase coming out of the other side. That's what we're seeing already. We have a nice volume spike on that final closing bar. And so next week we should see an increase in volume and a nice move to the upside based on everything I see in the BAM model. The fact that the stock was beaten down like this on, relatively low volume tells you everything you need to know about this move. And again, I said in one of my last tweets, anyone who sells ape shares on Monday, who have, if they have held AMC Common for the past year and a half, I think is just they've been misled or panicked for some strange reason, because it's illogical. It makes absolutely no sense. The ape shares represent a portion of the value of your original AMC Common that you've been hanging on to for a year and a half, tooth and nail, and telling everyone else you're going to hodl it and never sell. So I don't actually think many people were spooked or tricked. I'm sure there might have been some who might have even added shares and been a little too aggressive and had needed to back off on some of the shares, liquidate some of the shares. But for the most part, I think that's kind of FUD. The other thing about this deep decline that makes this even more bullish is, if you guys are familiar with my expanding megaphone melt-up fractals, which is something that's part of the behavioral analysis model, something I discovered when I studied the 1929 stock market crash and the 87 crash. If you're familiar with that, you know that this is a dropout. And so what's happened here is whoever it is that's forced this decline just shot themselves in the foot, because what they created here is something, a nesting melt up fractal that's even more bullish than the move was if they would have held this uptrend at, call it $22.35. So, again, not a financial advisor, not financial advice. All I can tell you is this is the bigger picture melt up fractal moving all the way back to the point of origin of this yellow uptrend and this overhead speed line. It's a monster melt up fractal. It's the one that can carry us into the $500, $600 range. It triggers if we move above this yellow uptrend line. We have retest levels at 52 and at 65.60. Those will be split adjusted. TradeStation has not adjusted the split. The data provider we use for the Anemoy terminal has adjusted for the split. So all of these will be halved, right? You guys will see all of that when I post a new video on Sunday. But my point is, if price moves above that uptrend line and re-enters this expanding megaphone melt-up fractal, it's mayhem. And the fact that they created this nesting fractal right here with a re-entry that is, depending on when it happens, anywhere from 25.25 to later in the week, call it 28. The fact that that can also spark off a smaller degree melt up that then can push price above this larger degree melt up tells me they shot themselves in the foot. So hopefully none of the sort of hardcore long-term apes are falling for anything that was perpetuated during the past couple days here in this washout on low volume. And hopefully I'll see all you guys at the finish line. We're absolutely winning. Good luck, you guys.